Hello, everyone. My name is George. Welcome to Company Founding 101, Class 9. And this is sponsored by Sun Endowment. And today, we're talking about fundraising, part 3. And we're going to talk about traditional funding sources. And what does it mean to be funding? It means money provided for a particular cause or purpose. And the traditional funding definition is there are the sources of financial obtained from the banking system and the capital market. So, what are some traditional funding sources, you might ask? There are bank loans, grants, and government programs are some of the most common ones. So let's go into a really broad detail of what these are. So traditional funding refers to the conventional means of securing capital through bank loans, grants, and government programs. A bank loan, it is the sum of money lent by banks that business must repay over an agreed period of time with interest. Grants are non-repayable funds provided by various organizations, often for like nonprofit initiatives and stuff like that. And government programs mean it offers financial aid from government to support and stimulate growth of the economy by putting money into these small businesses. And bank loans is the most well-known one, and it comes in various forms. And I think this is the most useful one, like including term loans and credit lines, commercial loans, and more. And it depends on your need of what type of loan you get. And companies usually use bank loans to start up because it does cost a lot of money to start a business, and not a lot of people have a lot of resources to start companies at that scale because you need to cover the operational cost, business expansion costs money, purchasing equipment costs money, and so much more. So it provides a large sum of money, and which is quite crucial in business growth. So I'll go into some detail about how to apply for these bank loans. The eligibility is you need a good credit history. You have to repay your, bill every single month. And a really solid business plan to present to the bank that they'd be like, oh, you have a solid business plan that has a really large chance of succeeding and a collateral to qualify for a bank loan. So what are you putting online? You can't just go in there and be like, oh, just give me money, I'll pay you back, because what if it doesn't work out? Sometimes the collateral might be car, it might be a house. And that's the really tricky part about the economy because a lot of investments, they don't look at underprivileged people because they don't have the resources and collateral to pay it back. So it's hard, and the social class is being solidified. So that's what I'm trying to change because for Sun Endowment, we want to give money to those who are underprivileged and who has an extremely good business idea. Although they might not able to, pay you back, or like this business idea might fail, but it's not about that. It's about the social impact you make because there are so many people that are struggling, and by doing entrepreneurship, it's the best way to help them because you gather all the resources together. And well, this is a bit off topic, but then it's repayment. Repayment terms vary, but it generally involves consistent amount of period over a set amount of time. For example, if I loaned $1 million, I pay you 100,000 back every single year with like a 45% interest on it. Now here are the grants. What are grants? They're non-repayable. They're the most appealing, I would say, because you don't have to pay them back. They're awarded to businesses with initiatives that really align with the grant's objectives. For example, you know, Morgan Stanley and government have this, that there are like departments for that you present a business idea to them as a small business and you are trying to help people and they're just giving you grants for it because it matches their costs. And there's like, Google Venture, Morgan Stanley, these big venture capital firms also have departments that give out grants for these purposes as well. And it comes from a variety of sources, including like I said, government departments, foundations, trust, and corporations. UNICEF is a foundation for this as well. And the competition is really high because they're non-repayable. So everybody is just trying to get them. So make sure you do really stand out and your idea can really make a social impact change. Sometimes when you are creating a company, you think about, oh, what can I get? But I think put that second, third, or even last is necessary because you gotta think what I can give to others and to society. And if you can reach that to a certain level, what society can give to you is just comes naturally. Government programs. This I'll talk about the variety, purpose, and target sectors. So the government programs vary really widely, and they can take the form of direct loans, loans guarantees, insurance, even grants for innovation. And the purposes of these government programs is to support small businesses or businesses in general. I think every single city have a department about small business and economic empowerment. It stimulates economic growth and promotes innovation because they really want to reward those who have a unique idea and have some sort of social impact tied onto it. Although I don't know how much work it is doing, to be quite honest, in the grand scheme of things, but it is a huge step toward economic empowerment and economic equality. And the target sectors are like technology, clean energy are the most, you know, common ones because it renovates stuff and it really makes us more convenient and it saves the environment. That's why they love giving out these loans and give out, these insurance and grants. So, of course, there are going to be limitations to these traditional fundings. I only talked about the good things. So, first of all, is the stringent requirements. Traditional funding sources always have like really tight requirement and necessitate a substantial amount of paperwork. You need to fill out a lot of paperwork in order to get the funding because to them there is a risk investing in you because you can literally get the money and just do whatever you want. So you need to fill out all the paperwork. You need to present to them a lot of stuff. And the money disbursement is extremely slow because for grants and government programs, when you submit the paperwork, it's not that they just can just give you the money. They have to like send the paperwork to higher ups and then higher ups and then higher ups to then give you the money. So it takes a long time. So if you're thinking about traditional funding and if you get one, so please be patient. And the risk there is as well, because the loans, you have to pay them back. And it's just non-compliance with grant usage. It can lead to like a revocation of funds or like penalties as well. And when you invoke those penalties, it's really not fun. And the risk of you not paying back and your cash flow being broken, it's just quite scary sometimes because when you can't pay it back, your collateral get taken, and that collateral might as well be your house, and you have nowhere to live. And that might be just the end of you, the bet you lost. And there are a lot of risk by getting money from banks, traditional funding. And there are upsides as well. For example, it gives you a large sum of money. You get the most support from the government. You get way easier branding because you can say, oh, the government give me this, da da da. But again, it's a double-edged sword. Everything is a double-edged sword. I'll leave you off with this again. Believe you can be successful because I do believe in it. And thank you so much for listening. Please email me. This is my email. If you have any questions and potential partnerships that you want me to invest in, present me your business plan and we're going to talk. And see you in class 10.